Hey, welcome to week 263. We're talking about the big, beautiful bill, part two, because we went long and hard in 1202 last week. And there's a whole lot more to it because it's thousands of pages or close to 1,000 pages. And I'm not sure even the bureaucrats that voted for it or voted against it knew what they were voting for or voting against. But all I know is some of these tax things are really good for businesses and uh, and it's going to be a good thing for our economy, I think. So anyway, before we dive into that, you guys know the drill. Hit us up in the chat if you want to harass us. Hit us in the Q&A if you have questions. And let me think what else. Oh, by the way, yes, the big beautiful bill is really beautiful, but we had two beautiful goals last night for Charlotte FC. I was not able to be there in person. Jack Santinello was, but I was watching it, and some of our guys FaceTime me that were in the stadium, and they're like, "Dude, where are you?" And I was in my kit watching it on TV. So it
Yeah,
was
we
fun.
missed you at the impromptu tailgate that we had that I sent you text to. So, but that's okay next time.
Yeah, they've been long days and short nights recently, so it worked. I was able to double duty, watch the game, and work on a big training that I'm going to be doing. So anyway, um, so Adam, you got a riff that you want to hit us in before we go in, or a Jack kind of jump ball? Your choice.
Um, Usually this is well, it's either do you want me to piss everybody off before Jack goes or after Jack goes?
No, no.
Which direction do you want to go with the call?
I
Um,
I really don't have a whole lot. I don't. You can go because I feel like that Shoemaker took up a lot of time last
uh,
last week. So it's all. I'll go for it.
all right. So the only I guess the the only thing that I would riff on, Gary, since we have a pretty educated audience on, is that the there's a lot of things that I don't necessarily like about what the North Carolina General Assembly does. And at the same time, I'm always impressed with how smart they
Huh.
relative to other state legislatures, like my birth state, Oklahoma, not impressed. So even though philosophically there's a lot of alignment. So I think, with the Supreme Court decision to let the Department of Education thing reduction keep going forward, and like provisions in the one big beautiful bill that result in cost savings. Like if I just take the Department of Education as an example, you know, the peop the head count's been reduced by 50%. So anybody, like, there probably were jobs just like there are in any organization where that job was stupid. Like, why did we do that? That was done. That person, like, that job should not have existed. It was just created to create more bureaucratic overhead and infrastructure. It's like that fairly should be eliminated. um, but anytime that someone says, well, we're giving this back to the states to decide, but the job did something, that's just cost transference. And somebody's still gonna have to do that job. And then the next question is like, well, does the state have the person available to do the job already or not? Like, where are they gonna, And so I think this is a long way of saying, like, I was appreciative of the fact the North Carolina General Assembly is now having meetings to talk about, hey, this kind of means we're gonna have to start spending more money now that we weren't planning on spending. And I just, I that's just a long way of saying, hey, let's all go wise wide open. One man's states' rights is another man's. Now you're gonna like I was gonna pay the money either way. You're just now just telling me who's gonna pay it. Either me as a resident of the state of North Carolina or me, as a resident of the United States. Like either way, it's getting paid. We're just debating who's gonna pay it. And kind of the only as we keep on going down this, kind of the only downside of the limitation or like of the devolving is it's a balancing act of like, okay, you know, more more control at the state level, that's pretty cool in some respects. At the same time, you do eventually run into problems of like, you know, if Gary and I merge, do I need two CFOs? No, I don't. I need one CFO. So one CFO is redundant. So if we end up with like the situation where we've got, you know, all the states creating the same position working at half capacity that, one person can do it at the federal government, that's going to suck. So I just hope somebody's keeping an eye out for that. So soapbox done. Sorry, Gary. That's just the part where I'm like, I do wonder like how this what sort of analysis goes into like what is truly a cost elimination versus what is truly a cost transference. And I think the North Carolina General Assembly is thinking that through really well. I'm not confident anybody else is. I'll shut up now. Sorry, Jack. Save us all from that.
Okay, I will do that. The one thing that I want to add is it's often a tangent, but it's related to the big beautiful bill. Is something that my father, who is an Air Force veteran from Vietnam era, so he was not in Vietnam, he was in Thailand next door with the Air Force, and the PACT Act that is within the big beautiful bill. And I'll just read to you what it is. It's legislation which expands VA healthcare eligibility and benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. It also adds more presumptive conditions for toxic exposures and expands presumptive exposure locations for certain substances. What that means is that more people are included, more symptoms or health issues are included in being presumptive as being caused by this.
Yeah.
I will also, and I don't think my father would mind me telling us he's had some health issues that now it's like, oh, okay, maybe there is a relationship. And I said, but you weren't in Vietnam exposed to Agent Orange. And he said, yeah, but the people that I dealt with that came back over to the base had been walking through all of that. And yeah, we were
Wow.
next to where there was Agent Orange. In fact, then he said, when he was walking back to the barracks, there was Agent Orange. And I'm like, okay, great. That explains a lot. But he's
Yeah.
become very passionate about that. He's involved in
Yeah.
several veterans associations and organizations, mostly in Matthews where he lives. But I feel obligated to share that. I don't know if I would have presumed that maybe there's some veterans or some people who know veterans or have them in their families that if, that of that era, that you may want to look into this because there are benefits that you may now have access to that you didn't otherwise previously have access to. And it's pretty expansive and important.
Yeah. So I'm curious, before we jump into more of the big, beautiful bill, I want to find out from the audience, what are your biggest questions that you have unanswered about the big, beautiful bill? Um, I want you to hit that up in the Q&A because I want to see I want to see how your answers line up with what ChatGPT said.
That's funny. I should have consulted ChatGPT about, hey, what are the most common questions we're going to get asked? So,
Yeah, yeah.
so
So
I was,
I have that
okay,
teed up.
Okay, got it. Well, yeah, if nobody asks a question, that's perfect. Did you want me to just start going in where Warren left off, or how did you want to do this, Gary?
Yeah, so since we've got a bunch of people that are either multitasking and Canvas in the background, or they're very shy, which I don't think is the case, but who knows? Let me just go down and Adam, why don't you be prepared for this first question?
Okay.
How will it affect taxes for my business? And let's talk about the 199A QBI pass-through deduction.
Um, that's a good question. It's funny, depending on how I would ask it. The answer is that won't have any impact in the sense that it's already here and we're already taking advantage of it. The only difference
Right.
is instead of it being phased out, it got made permanent. They also changed some of the income limitations associated with it to where it phases in a little bit earlier for people so that more people can take advantage of it. And I haven't seen too much around it, but they're also going to do some more work around what's the definition of who qualifies. So um, that's all I think generally pretty positive. That's one where it's like, yeah, y'all needed to, you know, regardless of Adam's view as a U.S. resident on continued deficit spending, um, that was a good one. Corporate tax rates and by default, pass through entity tax rates are important to have a level playing field with other countries. So in other words, like you can't credibly make an argument about tariffs leveling a playing field and not also talk about the tax rates leveling the playing field. And then you gotta level the tax rates between the type of entity that you are. And I think making this permanent did so. So we're super pumped about that. The action item that we have on this one would be the same as we've always had on it. You know, one is, um, you know, if you're already an S corporation or a partnership, make sure that you're kind of dialing in. What should your wage be, or what should your guaranteed payment be if you're a partnership? Should you set up a holding company to take advantage of the deduction if you can't as a partnership? That's number one. And then secondly, if you're one of these people that are like, I'll have employees over my dead body, everybody's an independent contractor, um, regardless of well, are they really independent contractors? Are they really employees question or not? You're missing out on this deduction because what you pay to independent contractors that really are your, don't post this, Jack, employees, not qualifying. So I mean, when we run our own clients through the analysis of, well, look, dude, I got it. You don't want to deal with offering health insurance, and you like your 401k the way that it is and stuff like that. When you then show them the cost of not getting this deduction, they're like, I'm an idiot. Of course I'm going to convert everybody over. So like 9 times out of 10, the people that have been like, these people will be employees over my cold dead body, 9 times out of 10, they end up convert. One out of 10 is like, I still don't want to deal with it, and it's not worth it to them. So that's that's something. And also for the people that are, hey, that's great, Adam. I'm an individual S corporation owner. How does this apply to me? There's still a math formula around what you pay yourself to maximize this deduction. That's different from what's the minimum that I can get away with. So it's still worth looking at.
That is absolutely correct. According to ChatGPT,
Woo!
it raises it. It does make it permanent. It raises it from 20% to 23%, benefiting many sole proprietors, LLCs, partnerships, and S corp owners. That is ChatGPT. So there you go. Talk about bonus depreciation, and let's see how you stack up against ChatGPT.
this was, they kicked the can on this one. So basically, they, what had been happening with bonus depreciation is that it had been phasing out. So all they did on this one is they said, hey, let's revert back to 100% immediate depreciation expense like it was when they first passed the 2017 Tax Cuts and Jobs Act. And then they put in a phase in again, but I think the phase in starts 2 years down the road again. So basically, we got a 2 year reprieve of 100% depreciation before it starts phasing down again. So the X phantom on this one is like, most people are doing it anyway, but to the extent that you're going to buy something, buy it. You got.
Correct.
So basically, what that means, Jack, is that whoever handles all your aircraft aviation law, they're probably going to get real busy because I feel like the airplane market's about to heat up again.
Yeah,
All right, I'll tell Trey that.
Yeah, there you go.
that's exactly right. Have them fire up the engines because, according to ChatGPT, 100% bonus depreciation for equipment and software purchases. It says through 2029. Now, is this now the phase in may begin, but it says,
I think the phase in begins at 2027, if I'm not mistaken. Don't quote me on that.
and then it says it doubles the Section 179 expense cap up to 2.5 million.
Yep.
And then one other thing that is kind of in this, we've talked about this too. It does make permanent the lower individual tax rates and higher estate tax thresholds, easing long-term planning. Um, However, this is an interesting thing. So let's talk a little bit about payroll and tip exemption rules changes, because this is going to affect payroll systems, which, hey, that I guess would be a software, and you're gonna have, if you're with a PEO, they're gonna have to be doing it, and if you're doing it yourself, you're gonna probably be looking at some payroll systems upgrades to make sure that you're tracking tipped and overtime wages. Um, so
Yeah. So basically, on this one, it it a little bit more familiar with the mechanics on the overtime wages. I mean, basically, you know, both are going to be subject to income limitations, and there's still some guidance coming out on exactly how this will be implemented. But I believe what's going to happen is that it's it's not so much that as the employer, I'm going to have to do something other than to track it. Because I believe what's going to happen is that, and if I screwed this up, we'll correct this next week. um, I believe what's going to happen is that as an individual, I've got taxes withheld, but then I'll get a deduction for what I paid on a certain category of things on my personal return. So, for example, if I got paid 15 bucks an hour and overtime is time and a half, so that means that for the hour that I worked of overtime, I got $7.50 of overtime pay. That's the part that's not going to be subject to income tax, subject to some phase outs. But I think what ends up happening is that I just will, at the end of the year, report all of the overtime pay received, get to remove that from my income and calculating what my tax is. I don't think that it'll end up impacting the actual withholding itself on my paycheck in that specific moment, but I may end up being mistaken on that.
here's another little interesting point that I think is probably worth noting that I noticed, and it's that the 1099 reporting threshold for contractors is raised from 600 bucks to 2,000.
About
So
freaking time on that too, because it's been 600 forever. So it's about time that that went up. I also kind of feel like that's somewhat of a waste of time too. So I wish they just make the whole thing go away. But at least
yeah,
they raised the threshold.
yeah, yeah. So then let's, with regard to back to payroll and tip exemption. So ChatGPT says new tax credits for employees overtime and tip income up to 12,500 for overtime and 25,000 for tips. And salaries under filing thresholds, this applies 2025 through 2028. Anything that you would add on that one?
No, I mean, it's interesting that a lot of these happen to phase out right about the time there's yeah, another election. So nothing permanent, with the exception of what was already permanent.
Yeah. Um, I think this is kind of funny. The action steps. This is not, this is from ChatGPT. Talk to your CPA or tax advisor about optimizing your 199A deduction expensing rules and entity structure. And
Yeah,
I would say it missed this part. You might also want to talk to your attorney about your entity structure in conjunction with your tax advisor, because a lot of times what we see, and I get that purview, and so does Adam, with a lot of clients that come to us that have been disappointed with lack of responsive service from their CPAs or whatever. And so we start digging in their stuff, and it's interesting how often we find that they had an attorney that drafted an entity structure, and then their attorney and their CPA actually didn't talk, and it wasn't necessarily in their best advantage. It's like everything else. Is this a good one? It depends. But if you look at it holistically and what you're actually trying to do, sometimes it's way better to make sure that you get both of those people in the same room talking,
yeah.
regardless of whether it's us and Shoemaker or not. Like that is a good best practice. Get your advisors in the same room, even if you got to pay for it, and you do. Um, get them in the same room so you're on the same page early on. So,
Well,
uh,
I'll give you a good example that's live and happening next Thursday, and they're not on the call, so I guess I'll have to share it with them later. It also came up earlier this week with another client. I know this would never happen at Shoemaker, and these actually were not Shoemaker attorneys, so I can actually say I know this would never happen at Shoemaker. But like last week, we had Warren on, and as I mentioned on the call, there's few people that I'm going to bow down to on the tax front, and Warren's one of them. So he knows a lot about code section 1202, qualified small business stock, and all that kind of stuff. Well, if I'm Joe attorney dealing with a company, and I see these new estate tax rules. Hey, it's my opportunity to clean a few things up. You know, Clients contemplating a transaction at some point in the future. I want to create like a holding company concept. Blah blah blah, all this stuff, right? Like I'm gonna do some work around estate planning and simplifying the corporate structure, right? If I don't know about this, you know, because I didn't
yeah,
talk to the CPA, or let alone I didn't talk to my tax attorneys, I just screwed the client massively, with the work that I did. So in both examples, there's a whole bunch of there's some restructuring and some, hey, let's simplify the corporate structure stuff. And you know, when I bring up code section 1202, they're like, oh yeah, we do need to consider that. I'm like, how was that not your first thought? Like, like, how did you not think of that first? As an item.
Yeah, we routinely, so when we are onboarding a wealth strategies client, it is okay. We want to know more about you. We send a questionnaire, we get all their information. What do you got? What do you want to do with it? A lot of times it's like, I'm like, okay. What is your CPA said about it? We haven't talked to them yet. I'm like, okay, and that's fine. We're gonna put together what our thoughts are. but there needs to be coordination with your CPA because they may have other thoughts or they may have other information that maybe you didn't tell us about, like, oh yeah, I do have that stepchild that I need to deal with, or I do have those assets in Europe that I just assume that, oh, well, this is US planning and I'm a a US citizen. So my holdings back in my country of origin don't really matter, do they? It's like, yeah, they do. They may be disposed of in that other country differently, but that needs to be part of your overall plan. So things like that that come up. So there definitely has to be a lot of coordination, not just on the estate planning side of things, but just setting up the business. When we start talking about succession planning within an operating agreement, it's one of those things that comes up. So yes, definitely. Another thing that comes up that I want to bring up that has come up recently are these Trump accounts that and it can be, we've talked about incentives, retention, those kind of things that would attract potential employees, that would keep potential employees. So I don't know much about this other than what I've read about it. And so I'm going to read to you what it says. So these accounts, individual retirement accounts for minors in a pilot program where the government will contribute $1,000 to this account for each child with a valid Social Security number born between December 1st of 2025 and December 31st of 2028. So if you're planning to have a child, maybe you shouldn't. Well, it's probably too late now with it being July. Maybe wait a
Yeah.
little while longer and just to make sure you get over that December 1st, 2025 line. So there's first piece of friendly, not advice, it's guidance. Secondly, the earnings grow tax deferred. Each year, the account may receive up to $5,000 in contributions, increasing annually for inflation, so it'll be adjusted. Contributions to the accounts are not tax deductible by the donor, which is important. So it's not that you can contribute this money and then whoever, the employer or parent, whoever it is, it can deduct it. Contributions made by the government, made by a rollover from one Trump account to another, or made by a nonprofit entity to a qualified class of beneficiaries are excluded from the $5,000 limit. Employer may contribute up to $2,500 to its employees' children's Trump accounts, but those count towards the $5,000 contribution limit. So that's a long-winded way of saying another potential perk for your employees that is partially government funded, and it would be in a stock index fund, and they can't touch the money until they're 18. So basically, a lot of things going on there, which is providing money for a child that they can't touch for a long period of time, so presumably will grow through the stock index fund. And so that 18-year-old will have something there when they get to the age of majority. So I just wanted to mention that.
Yeah, that's good. One thing that I did find here that I thought was interesting is it says, so I don't know if this is going to affect that many of our folks or not, but just in case. So they have transition support and grants available. Well, remember 5 years ago, when we were like PPP, and then doors get slammed on people's fingers. It's probably the way this is going to work too. But basically, it offers small businesses transition support via IRS taxpayer advocate programs. Good luck trying to get anybody from the IRS. But there you go. SBA technical assistance and temporary grants for compliance implementation. So what it does is it helps an employer offset system upgrades and compliance costs. But there is the caveat, grants are limited. Early applicants are likely to benefit most.
Yeah,
So
I would say that 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 part of it, what Gary just said there, there was all the ballyhoo about, how dare we give the IRS more money, blah 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 blah, let's take it all away. They didn't do that. What they did do is they specified the allocation to go to taxpayer services, which is another way of saying they'll pick up the freaking phone when you call. And then the second is towards technology, which some could be related. I mean, I could see like because IRS is super antiquated. I mean, in terms of like, hey, what if we actually put some AI in there, that I could talk to on the phone? That would be a pretty amazing lift in lieu of hiring some people. So basically what they said is, of the money that was already appropriated and it's left, we don't want it going to enforcement. We want it going to um, helpfulness and technology, which, I get. At the same time, you know, there aren't any shoemaker clients or BGW clients. This is the case, but the data speaks for itself. For every dollar spent on enforcement, there's like $1,000 return in tax dollars. So, like that is it. That is an element of closing the budget deficit, is getting the people who actually should be paying taxes to, in fact, sir, pay them.
Yeah.
So here's another one
So
that is, again, interesting and pertinent because kind of thinking about things for my parents. This deduction for seniors, effective
yeah,
2025 through 2028, individuals who are age 65 and older may claim an additional deduction of $6,000. It's in addition to the current standard deductions for seniors under existing law. It's eligible per individual, so it'd be $12,000 for a married couple. And basically, you have to attain the age of 65 on or before the last day of the taxable year. So, congratulations if you are 65 or older by the end of this year, and then you can deduct that. So, again, I think that what is happening is seeing increased costs for seniors on the health care side of things, but just generally overall with inflation and cost of living and cost of food and everything else going up. This is just kind of, I mean, it's a drop in the bucket, but I mean, at least it's something. So it may be something that you or your parents or aunts and uncles and others are not aware of. So I also throw that one
yeah,
out there.
yeah, that's really good. With a 90-year-old mother who's still in her same house, and that's going to be changing here soon. It's shocking to see what a monthly cost is for a 371 square foot assisted living where she's still on her own, but like she didn't spend that when they were paying on their house for a whole year, for it's just crazy. And if they could fix the healthcare costs, I know this is Adam's like hot button, but like, oh, holy moly, that one's still massively broken.
Yeah.
But I am grateful for all of this other stuff that's been coming down the pike. You know, as we kind of round out, moving towards, I mean, heck, we're only 35 minutes into this thing. So um, now's the time. Anybody that's sitting on this call, stump us, hit us with your best shot. And it doesn't necessarily have to be just on the big, beautiful bill. Um, we're in summer, but guess what? You better be doing some tax planning right now too, and at least having your conversations with your CPA and getting those on the calendar. Um, Anything from your perspective, Adam, that you are seeing with some of these changes that you want to get ahead of, whether they're a client of ours or not, like that you would just recommend, hey,
Yeah, I think
start
that,
getting ahead of it.
kind of the other, when I was thinking through, okay, for our clients, based on the advice that we've been giving, what are the differences in terms of the advice that we give? There really are two things. One is, for the clients that again, you're not recording this, right, Jack? We strongly discourage them from believing that they had research and development, because way the deduction happened sucked with the Tax Cuts and Jobs Act. They've changed it, as they should have done a long time ago, to where it's now back to the good old days of, hey, it actually is highly financially lucrative to have R&D. So we would encourage revisiting the topic of innovation and research, because the R&D tax credit is back, the way that we liked it, which means that I don't have to capitalize the expenses and take the deduction for the expenses over time while I'm getting the credit. So that's number one. We already talked about looking at your entity structure if you're thinking about selling. The second is that this applies to some, well, actually, I mean, for example, if, let's pretend for a minute that Jack's below the income threshold for a minute, but because we know what attorneys make, but he's shooting daggers at me, people. You can't see that, but he's
No,
not
you
happy.
you mistake me for someone else, but that's okay.
Yeah, yeah, mistake you for Phil Chuck. Anyway, the a lot. So basically, when the Tax Cuts and Jobs Act came around, um, we got a gift from, and they eliminated effectively itemized deductions because they got rid of the ability to deduct state tax payments. That stuck it to a lot of people. But as a business owner, this the states, did us a solid. A lot of them passed through what was called the pass-through entity regime, which basically said, hey, company, you can pay the business owner's tax liability associated with their K1 income at the company level, and then have it be excluded off their individual tax return. And by doing so, that means that since, it's a company expense now, it's now deductible at the federal level, even though it's technically for the benefit of the business owner. And in the past would have been a state estimated payment that I would have made out of my personal account. Now the company's paying it. So what the one big beautiful bill did is, first off, it said, it codified, yeah, that's legit. We're okay with that. So yay, that's awesome. But at the same time, I actually don't know what Shoemaker does, but I will use BGW as an example. BGW, even though we qualify for the pass-through entity tax deduction, we don't actually pay it because every person here has a different tax rate, different attributes. So in a multi-partner environment where everybody's pay is variable, it's just hard to administer, and have it still be fair and make sure that Gary's not receiving. So it was just like, sorry, since we can't make it fair, nobody's going to get it. And that's what a lot of law firms and medical practices and dental practices and stuff like that did as well. So point being, now state taxes are deductible. So for a wage earner or for a company owner that wasn't taking advantage of the pass-through entity tax for whatever reason, BGW included, it's now a deduction that's available to the owners, which would mean that, we go back to the old school advice that, if it's capped at 40 grand and you owe 20 grand, we might have you double up on a payment, to maximize the deduction and kind of prepay in advance the state taxes that you were going to pay anyway, while this is around. So that could also be a change that's coming. Nothing that's needed right now, but it's something that we'll be bringing up as we get close to the year end.
So here's a note from Ellen that I'd like you guys to weigh in on. It says individuals, not businesses, but I just found out that the big beautiful bill includes a change that allows for charitable contributions even if you don't itemize. The limit is fairly low, $1,000 for individuals and 2,000 for couples. Thoughts?
Yeah, there's they changed it to where you don't do anything with the charitable contribution unless you meet and like it's tied back to your AGI, that there's a floor before you can deduct it, with automated passes that Ellen put there. So I think that's all really going to change for us in terms of um, the, you know, we might stack charitable contributions, which we're doing anyway, but at the end of the day, Jack's still going to bring me his goodwill receipts. I'm going to say, oh, thank you, Jack. And the only difference is I may or may not do anything with them. This time around.
So, two quick things. One, going back to the R&D credit, I've got a new client that because of, and they're a manufacturing company, so they definitely they're a manufacturer and distributor, but they definitely qualified before for R&D, but the juice wasn't worth the squeeze with all the amortization. But now that that's been revoked and there is no amortization required and they can take it, um, right now it's looking like they've got at least 50 grand um, in cash that will be flowing back to them because of R&D, which I think, like it's worth looking into. Um,
Yeah.
and then Papa Joe, it's so good to see you weighing in here. And he says, this is pretty cool. He's not just giving us static, he's actually giving us a shout out. He says, wanted to give a shout out for the clarification about when tariffs are imposed, discussed last week. We have a shipment of 200 plus machines coming from Korea under a 10% tariff. If they came by ocean, they would have arrived after the August 1st deadline to raise tariffs to 25%. The difference to have them come by air and arrive before August 1 was less than the increase in tariff to 25%.
No,
So
wow. Yeah.
that's pretty good. I mean, that was really smart thinking of on your part.
Yeah. We had a value. Yeah. I mean, not to be, well, I guess I am going to be a Debbie Downer, because I'm not as, I'm a fan of fair trade. I'm not a fan of the tariffs based on what Joe just described, and they're like, hey, we're the ones really paying them. I think, if you just, what Joe did is awesome, and that's actually going to save his customers some money in the short term. So if you think about, like, okay, well, how does that roll up to a broader level? It means that the prices that we're paying remain low for a period of time while Joe's doing stuff like that, like accelerating a purchase or changing the method of the shipment, to avoid the higher cost. But eventually, when that's gone, the higher cost sets in, and somebody's going to have to pay it. Either Joe's going to eat it, or he's going to pass it on to me, or he can negotiate. I think the intent would be, he could try to negotiate with South Korea, or South Korea negotiates with the federal government to try to, get it permanently reduced. But at some point, if I'm stuck with the higher tariff, somebody's going to get stuck. Somebody's going to get stuck paying it, there's which is when there's a discussion around, like, that's when you would start to see the inflationary effects of a tariff. Just because even though people have paid them, you haven't. I think some people have done the whole preemptive price increase due to tariffs, similar to, like, hey, hurricanes coming, let's raise grass prices. But it
Right.
hasn't been huge. It hasn't been too bad. It hasn't been too bad at this point, from what I've seen.
It's a great
Yeah, weren't we
marketing
at
sales tool
1.66? Go ahead.
as well. And I mentioned that we had the privilege of having to purchase a HVAC system, not all components of it, not just getting away with just the air handler or other components. So, and it was as I mentioned previously, a cost benefit analysis, and it was okay. You can replace these parts, and here's the cost, and that'd be perfectly fine. It's going to work for a little while longer, might get you through this season, or you can replace it. And if you replace it now versus replacing it later in anticipation of tariffs, here's what is going to happen to you. meaning the price you will pay down the road. And you might imagine my personality is I don't like to get bullied into purchasing things. Car salesmen and I do not get along because I go in and they're like, as soon as they say, what will it take to get you in this car today? I said, it's not going to happen. And if you say that again, I will walk out. And sometimes they've tested me and I have gotten up and like, wait, wait, wait. And I said, I told you what the ground rules were. In prior times, I'll put down my watch. And when my first child was probably 2 years old and we were looking for our first family, I conceded to the point that we needed a minivan. I went in there and said, okay, you have the lesser of 15 minutes or when she wakes up. So please talk quietly. And I was serious about it. So anyway, I don't appreciate that um, effort, but I also appreciate it from the fact that it's true with respect to tariffs. And so I've seen it, and I've seen clients who have done it, seen clients who have experienced it by sending me a contract saying, we need to sign this tomorrow because the prices are going to go up on Monday, kind of thing. And I'm like, okay, if that's what, I'm not going to go through the fact that you're probably might be being swindled in this, the sales pitch, but it's yes, the short-term benefits of being able to sell stuff where you might not have otherwise done it, or getting people onboarded but that time frame is dwindling just as over the passage of time. I do also want to bring up switching gears, opportunity zones, and the reason being is I have clients who have invested in opportunity zones as part of their business and business plan, not just as an investment, but also in actually utilizing the building that they build in an opportunity zone. And these are, existing areas that are potentially problematic, whether it is, contamination or those kind of things, or lesser valued areas that want built up. So there was a very limited window for those a few years ago, and they've re-implemented that. And so opportunity zones will be determined on July of 2026 and take effect in January of 27. The same process will take place every 10 years. So, and the program is similar to as it was under prior law, which is gains invested in opportunity funds are deferred for 5 years, assuming no sales prior to year 5. So you have to hold it. Gains invested receive a 10% basis step up at year 5. And then all gains are excluded after a 10-year hold period. So it's one of those things similar to kind of the 1202, where there is a long gestation period, meaning 5 years in that case, or 4 or 3 per the new law for 1202s. This is a 10-year gestation period to get the full benefit of that. But it's a strategy that's being implemented by some of our business owners as investment in themselves in the business.
Yeah.
And as individuals. But we see people who are being invited into funds as investors, passive investors, and investing into, and that entity would be the investment vehicle into the opportunity zone to develop it. So just some opportunities that are tax impactful, but in the longer run.
Yeah, that's good. We actually had that come across. We have a number of clients that are in opportunity zones. And I've got another one that is a prospect that is wanting to kick the tires on that. So in the right thing, but here's what I have seen. You have got to be very buttoned up and don't let the tax tail wag the dog. Be sure that you're going into an area that makes sense for you and not be a wildcatter and speculate because that's not necessarily always the best. Um, so we got 9 minutes. Hit us with questions, but you said something that made me think. So a couple little shout outs. This is kind of a cool thing. We just found this out yesterday that BGW has been named best places to work for 2025 by Accounting Today, which, hey, that's a pretty cool deal. So I think that's pretty cool. And then I'm going to be in Boston with our group. We've got about 70 people that will be there for a Rising Stars Summit and we've got a bunch of people that, you know, we're filled with a bunch of people as well at BGW that don't want to be salespeople, and we don't want them to be salespeople either. We want to be able to have them just serve people, you know, and serve them well, and seek to serve. And guess what? Sales actually does come that way. But this is going to be for a group of people that were born after this commercial. Joe Azuzu, but this is just too good to not share, so I'm going to share this with you right now. Here we go. Can you guys see this?
Yes.
Uh,
All right. So let's see. Hold on. Yeah, here we go.
The amazing Isuzu I-Mart, rated one of the best by Car and Driver magazine. It gets 94 miles per gallon city, 112 highway. Its top speed is 300 miles per hour. And Isuzu dealers have millions in stock. So they're selling them for $9. And if you come in tomorrow, you'll get a free house. You have my word on it.
5.9 annual percentage of financing now available. See your participating Isuzu dealer for details.
Oh gosh, man. Those were some good days, man. I mean, when advertising was fun and
yeah, I feel like the new version of that is the is it Nationwide or Allstate, the Mayhem guy?
oh yeah, that's all state.
Yeah, I feel like he's for a while Progressive I thought was doing a pretty good job, but I feel like the Allstate Mayhem guy, you know, there's
Yeah,
not boring commercial in this in this repertoire.
no. Progressive Insurance used to be a client of mine up in Cleveland, and they actually have some pretty good commercials, and the ones about don't become your parents.
Those are good. Yeah, I like all those. Yeah,
Those are pretty funny.
yeah.
Oh, I walk around with those in the back of my mind, and then when I do something like that, like I will say something to a stranger, like, oh yeah, the that elevator is broken, which is irrelevant because it's not going to open, right? And so I did that the other day, and I was like, oh my God, no, 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 no. Or as soon as you hear Limu, Emu, and then
Oh
what's
yeah.
coming next? And Doug, you know what I mean? So why is it the insurance companies have the best commercials these days?
Well, it's funny. Papa Joe would he said he would pay money not to see any more Limu Emu commercials.
That
Hey,
it
but he
is pretty
remembered.
saturated.
Yeah, it's pretty saturated.
I do want to say something about that award that you guys got because there are a lot of awards that are not pay to play, but you can
Yeah,
manipulate them.
yeah,
So, and we've gone through the process on it's like I think like the Business Journal. So we
yeah,
were, and I say with all modesty, awarded that last year, and we're seeking it this year as well. But what it is the employees of the
yeah,
organization are given a survey, and in mixed in there, first of all, is about like question 4 or 5. It directs you to select strongly disagree or agree instead of strongly agree, and it's a control question to make sure that you're not just clicking strongly agree, strongly agree, strongly agree.
yeah, yeah,
It
yeah.
also makes sure and asks you that were you told in order to fill out
Right.
this form on behalf of your employer. And so, they take all of that into account. So that type of award that you guys receive, and congratulations for that, is genuine. It isn't one that you can go and get, and just because, for whatever reasons you're going to get it because they want to put your name and others in their magazine kind of thing.
Yeah, we do not do the what the car dealers do where give me a 5 star or I'm going to be crying and like what? I mean, it's just like baiting the system. It drives me absolutely crazy, that kind of stuff. And so when I saw this, I'm like, when I saw that we were up for it, I'm like, we got people that are busy and I think it's a great place to work. Like I can't imagine working anywhere else because I love it. I love the people. I love who we serve. I love our mission. Like I just love it. But I thought, yeah, they aren't gonna do it. And then when we got this notice yesterday, I'm like, well, dang, pretty cool. So anyway,
And it also ties into what we've talked about culture and about knowing the people who work for you and work with you. And
yeah,
that if there's something, so yeah, one of the I guess things that would prevent a company from doing this is maybe they don't want to know. Because if you don't get it, I think that these organizations will report back to you and tell you why you didn't get it. They won't tell you who said what, but they'll say, yeah, well, there was a handful of people that said in your Charlotte office, it's just crappy working conditions, or they don't feel like they're welcome, or all those
yeah,
questions that they ask you to answer in the affirmative, and it says strongly disagree. So you find out some people. So again, our suggestion is to walk amongst the troops and ask them questions,
yeah,
and,
heck
and
yeah,
give but give them permission and make them feel like they are permitted to be authentic with you, because if they feel like you just want to hear, if they feel like they need to tell you what you want to hear, then there's just no point in doing that, and it's going to
yeah,
be detrimental to your workplace and the culture.
yeah. It's antithetical to what you want it to be. It actually works against you. I got one other thing that I got to share with you. This is cool because this is not ChatGPT. This is this thing called GenSpark.ai. Um, so part of this presentation is like, I hate networking. Like I'm a people person. But I hate that word networking. I hate it. I hate it. I hate it. Like I hate going in a room of like business card exchanges. Like, I want to connect with people. So I did a bunch of prompts to GenSpark AI last night for this slide, and you will see. That is what networking feels like to me. A room full of clowns and having fake conversations. Hey, hey, hey. So that is not, connecting. That's what we're trying to do with this thing, as well as just how we try to live. So anyway, thank you guys for taking time. GenSpark.ai, they've got free stuff that you can do, and it's really cool. And I spent the $200 or whatever because I'm using it to create an app and some other stuff for the firm. But GenSpark.ai, and you just start talking to it like a grad assistant and say, hey, I want to do this. And it took me about 4 tries to get where I really wanted it to be. It gave me something really dark initially. I'm like, nah, I want it in a brighter room. And then it put me in kind of like a break room with fluorescent lights. And I'm like, no, I want it to be in more like a convention hall kind of thing. And then it had convention. And I said, no, take that banner off. And so it took about 4 or 5 iterations, but gave me what I was looking for. So
Hey
anyway,
Gary, do you remember what was the replacement for Google or for Safari that Chad told us about that used that instead on your phone? And if you
uh,
if you don't remember, that's fine. I just was
hold
curious.
on. I've got
Okay,
it in my, so base 44 is what Tom Labat talked about. And
okay,
then perplexity.ai is what Chad Jenkins talked about. He said use it
that's what
for
it
general
was.
search instead of Google. Perplexity.ai. We,
Okay.
we we'll have to get some of those guys back on here again because Tom in particular, like man, he took my prompts from GenSpark AI and the UI and all the stuff that it had developed, which was really cool. But then he took it into base 44 and did some really amazing stuff in 3 minutes while we were live on this thing. So it's just kind of still blowing my mind. Um, but anyway, guys, thank you we're at the top of the hour, a little bit past. We'll put this up on BGW CPA, or not CPA anymore. We're calling BGW Advisors. Um, YouTube channel, and same way with Shoemaker. They've got a YouTube channel, and we'll see you here, same bat channel next week, Lord willing. Thank you, Adam, and thank you, Jack.
Thank you.
Tell the
Have a
guys
rest
in
of the day.
Greenville office, hey, and we'll talk to you later.
Bye,
Have a
guys.
good day, y'all. Bye-bye.